A very warm welcome to you, Vamsi Bhogi and Nruthya Madappa in today's session, which is Startup to Scale Up. And I'm sure this topic resonates with all of us here and all the young millennials who are probably watching this. The whole country right now is in a state of influx where everybody is wanting to start up, whether people are already in the process of starting up or they are working somewhere. But you always go into these cafes and you can almost hear the murmuring of these conversations that, okay, I'm doing something by the side. Or if I get the right set of team or I get some investment, I have this amazing idea which I'm going to execute. I see a lot of senior execs in companies also having the itch to start up. So I am sure when I say that, it's not over exaggerating that almost everybody right now who's in the workforce is almost itching towards doing something on their own, and it gives a great sense of empowerment. And I'm sure never before than now is an amazing time to start up because of the way ecosystem has evolved, the way communities have evolved. I remember when 15 years back we were trying to start up, it was so difficult to even find co-founders when there was LinkedIn and Facebook and Twitter. So that whole concept has now evolved. You have communities like Network Capital. A lot of people have groups on social media. WhatsApp is there. So I think it's now much more easier if you have an idea to create an MVP, get together a small team, and also access to investors and capital. I wouldn't say it's easier, but at least the excess part is sorted. I mean, whether you get funding or not is a culmination of a lot of other variables and attributes. But at least today, it's not hard for a 19-year-old college student or a dropout to have access to any investor in the country or even outside. There are accelerators, there are boot camps which are available. Now, the idea for today's session broadly is threefold. First, we will look at that the whole concept of starting up. That how I know there are a lot of founders who have brilliant ideas, but it takes a lot of time for them to garner strength to start up. So we look at some of those softer aspects as well. Then we look at that if you already have an idea in place and you have a small team, how do you raise the initial capital to set up your initial startup? How do you build technology if it's a tech business? How do you look at sales and distribution strategy? How do you create a business plan? I know business plan is extremely overrated, but still you would agree with me that you need to have a proper business plan in place, even if you're reaching out to investors or even for your own clarity and between your shareholders and stakeholders. And then third, we'll also look at in case you start up and you're already an early stage startup, how do you begin to scale it up and how do problems evolve? And I think it's so amazing that we've got two so relevant speakers today. Vamsi Bhogi, who had startup sourcing and curation at LetsVenture. We have had conversation with Shanti Mohan Vamsi last year as well in AIMA forums. And I think it's an amazing, empowering platform for a lot of young entrepreneurs to at least get access to capital, whether through syndicate or through various innovative formats which LetsVenture have. Similarly, Nruthya, you are director and head of growth and capital development at 314 Capital. Pranav has been a great supporter for all of us at Young Leaders Council in AIMA. He's an inspiration. I keep getting his WhatsApp on so many exits which 314 is doing these days. So I'm sure we'll have a lot of inspiring stories from you as well. Before I hand it over to my esteemed panelists, few lines of introduction about both of them for our audience. Vamsi has been a marketer and investor primarily in his career. He is a mechanical engineer from prestigious IIT Madras. So we have something in common, Vamsi, IIT alumni, always good to connect. And he initiated his journey with stock market investing while he was only 16, and then by providing real estate services to business owners while he was 17, and with content creation for marketing 18 years onwards. So he's an early age entrepreneur, a great sense of inspiration to have somebody like you with us, Vamsi. He has also been an entrepreneur in residence at Trig Nanosystems, taking care of their B2C verticals, product management, and global international expansion. He was also the co-founder of Real Tycoon, which is a full-service advertisement and marketing agency servicing clients across locations in Chennai, Hyderabad, Bangalore, and Vizag. So I'm sure it's going to be really interesting culmination of his experience, which we leverage on today. Very welcome to you, Vamsi.
Thanks,
Our
Kartik.
other speaker for the day, Nruthya. Nruthya is the head of growth and capital development at 314 Capital. In addition to supporting the investments and deal sourcing, she also works closely with global institutional and strategic investors to drive the growth of their portfolio. Her team also partners deeply in planning and achieving financial and strategic objectives, including capital raise, follow-ons, revenue exploration, and then M&A and exits. She has also spent a lot of time in US and now in India, where she has led global teams across technology, finance, real estate, edtech, and economic policy. Before 314 Capital, she also led the Cowork Foundry, which is a well-known business accelerator for early stage companies, as the managing partner, investing in more than 25 companies and establishing global partnerships with Yale and Columbia University. Prior to Coworks, she drove revenue and growth opportunities at QMax, which is a leading ed tech company, where she spearheaded the 15 million Series B raise from Capital G and Sequoia Capital for the edtech giant. Throughout her career, she has designed and scaled products based capital for high growth companies, and that's the strength she brings to the table in today's conversation. She holds PS and MS degrees in electrical engineering from the prestigious Stanford University and MBA from Harvard Business School. So I'm sure between these two power pack profiles, we have enough. I'm not sure the financial capital that they will tell, but a powerhouse of intellectual capital for sure at our disposal today. So I'm going to start off with you, Nruthya, because you also bring in a very interesting perspective of having worked in the US, and we know in startup world everybody admires to look at what's happening in the valley, whether it's innovation around capital raise, whether it's innovation around business models or marketing. Everybody tries to see what's happening there, and you sort of bring in that diverse perspective of working there and now in India, and you see a lot of cross cultural migration happening. So I would like to sort of understand from you, how do you see the whole startup ecosystem evolving in India, and how do you see it in the US, and what are the learnings from there? And what kind of advice would you give across these three categories of someone starting up, raising initial capital to get off the ground, and then beginning to scale up for early to mid stage startups? How do you see the entire journey of startup in the context of this whole ecosystem, and also in the current state of affairs, which is extremely dynamic, as you know? Some initial thoughts, and then we'll take it from there.
Thank you. That's a very loaded question. But thanks. Before I start, I wanted to thank Kartik here and AIMA as well for having me. I like Kartik mentioned, I lead what we call growth and capital development at 314, and we have a portfolio of over 75 active companies. And across the board, the journey over the last 5.5 years within the firm itself has seen a kind of explosion of the Indian ecosystem itself. It's why we've all rallied around to help craft what that looks like, at least on the VC side of things, and in some way be very deep involved partners with our companies and learn as they grow as well. So I'll hope to bring some of that here. But to your point about my experience in the West and my experience here as well, the most interesting thing to me has been the flip of how we've evolved from the decade of looking to the West, admiring and sort of translating some of the business models and what works there to India, to actually building our own very unique playbooks, which now are translating elsewhere into the world. We have a very, very different type of a customer and consumer base that continues to evolve in ways that all of us are frankly not just shocked, but delighted, astonished, and continue to need to build for in a very different way. And through that, whether it's in fintech, whether it's in consumer tech, we're finding models and products and demand from very, very unique types of consumers that are driving a very different level of innovation out of here. So I think that's been the evolution that's been the most exciting, right? Like, so to anyone starting up, I think the playbook isn't no more anymore. See what's working in another geography and see how you can translate it to India. That's long gone. It's just understand really deeply, truly understand your consumer and how that consumer base, their needs are shifting, what they're choosing to pay for, and go very deep into those white spaces that you identify. And there are thousands and thousands upon white spaces that you can build for the emerging Indian consumer, whether on the business front or on the consumer front. So I think just starting from the kind of ideas itself that we see today, sort of the evolution, the strength of the ecosystem, and the strength of the founders themselves. That's the other thing that has shifted quite a bit. When we came back, when I came back about like 6 years ago, we didn't have a very huge sort of base of like massive operators, who had enough reason and impetus, or enough of an ecosystem to support them when they started up. So now we have even more of those operators coming into the play, but even the caliber of founders, right, with different types of companies, startups gaining exits, becoming incredibly large and a very real force in the ecosystem. What we're seeing is like founders multiple times over, right? Like your second, your third company. We're investors in Jupiter with Jitain. We have the privilege of being along for a ride with one of the giants in fintech as he builds out another giant in fintech himself. And it's a very, very different experience to see founders of that caliber and that experience coming back to build newer and newer ventures. But even that entire mafia, right, like of each individual company, whether it's from Flipkart, whether it's the Freshworks mafia, etc., the kinds of problem statements they're taking on, building from India, sometimes for the entire globe, right? Like sitting here, it's not just leveraging in those days like the talent arbitrage of finding maybe more reasonably priced resources here and then selling to the west. That's gone, of course, as all of you know, with the kind of talent what's happening nowadays. But besides the arbitrage moving here, what's really important is just products, world class products are genuinely being built out of India in a way that the rest of the world is really takes sitting up and taking notice of what, like whether it's design aesthetics, whether it's UX, whether the customer experience, or just rethinking the entire flow. We're truly building for global problems out of India today. So I think that big piece of advice I'd like to leave with across the board is knowing that as an entrepreneur today, you are no longer looking to the West for advice. It's a good and a bad thing that maybe some of these playbooks just haven't been written at all. And you maybe have to look at your peers, which now we have a ton of, to lean on for more advice within the ecosystem itself to build what the future of tech in India and the future of tech from India will look like. So that's, I'm going to wrap with that and leave Vamsi to also add his thoughts. We can come back to some of the other things you were talking about as you scale up.
Absolutely. Vamsi, do you want to add on to your initial thoughts?
Yeah, definitely. Because I think somewhere down the lane in the last 6 to 7 years, I think I've been fortunate enough to be a person who's been like from the bottom up sort of pathway, you can say, where I have seen working with fellow founders, etc. While starting my own company, trying to figure out things on my own, but somewhere wasn't really like, it wasn't easy as it seemed like, etc. So that point of time, when at least when I started off my first company or just working with many founders, I think the difference overall, how it evolved was like something like the ecosystem has grown very rapidly and it has become more supporting ecosystem. Because previously it was more like starting itself was more like a fascination, or like starting itself was more like a real hurdle initially, for at least like for the younger founders, or because they didn't have resources or they didn't know where to go to for several things which they wanted to start off initially. But I think several VCs took efforts, several maybe angel investors, super angels took many efforts to help people, nurture people, to really advise them basically, maybe like support them with resources, etc. And then I think over the time, even the scaling up thought really started growing overall, because as I was mentioning, the transition grew from just the hurdle of starting up to even it has become more of scaling up right now. So it is more of like execution. You just go and execute. Right now, you have to just focus on scaling sort of thing. The slogan has slightly started changing, is what I feel. It has turned over time. Right now, everyone is just starting off, as you mentioned. Even the people who are working, they have their own side hustles. They're trying to manage a side hustle on their side hustle. Even students are trying to start off something on apart from their studies, and they're trying to just make it stable. And once it is stabilized, they are trying to switch their jobs and they're just trying to get into the own startup. And then and somewhere obviously they're taking those leaps because obviously they know that the ecosystem will support them overall, because the funding spree that is there, which I think has been a very positive switch on for most of these founders. Because I personally know like 5 to 6 founders whom I know were in a very good positions. They have climb their ladder up. I mean, like on their respective organizations, but they still they were making very good money, I personally believe, but they still took that leap to really do that pay cut, not taking salaries, etc., because they believe that the ecosystem will support them, and they know that it could only be go into a positive direction. So I think that's where it has become more of just from initial it was like starting up to more of scaling up sort of pathway. I think the entire ecosystem has taken into a direction of, and where the ecosystem played a very major role in helping that shape overall that way.
Right. So I'm going to also take up a very interesting question, which is everybody's favorite, the topic of funding. So, nowadays, and I want each of you to address it in broadly three strokes. So first is, a lot of people have that, used to have this view that, in the West, you get funded on the idea stage, you have a great idea, you have a great presentation, and people are more risk takers. But back home in India, only when you have a proven business model, when you have revenues kicking in, only then investors start to look at you seriously. So that's one myth versus reality, whatever it is, you guys will tell us. That's one area I want you to cover. Second is a lot of people also believe that at an early stage, unless you have a strong team from IIT, IIM, Stanford, Harvard, and whatnot, your chances of getting funding are extremely slim unless you have these tick in the box folks in your team and the founders come from that pedigree. It becomes extremely difficult. That's the second area I want you to talk about. Third, a lot of people also have this view that unless they have demonstrated some form of success in their previous venture and in their previous innings, it is very difficult for them to raise funds at a very early stage unless the business model has been proven and they are in revenue. So I want you to cover all these three aspects and sort of demystify it for all of us here, and help us navigate through these areas. So do you want to start first, Nruthya?
Yeah, sure. I think we have to realize what the business of venture and fundraising is, right? It is about it's an asset class of financing where you're actually managing money on behalf of a corpus of investors, and you find this really exponential growth in this asset class of startups. But still, it is finance managers who are thinking about allocating their money across different types of assets, and you've got to do a sort of risk reward profiling with very very little, sometimes no information at all. Now, when that is a thing, I think the mistake that like founders do is that like you don't start with understanding the risks that a VC is looking at, and hence how you should maybe position yourself, right? Like to your point about when you're really early and you don't have a product, what do you really bet on? You don't really bet on the idea. VCs don't bet on necessarily ideas, they bet on markets, right? Like at that time, you're like, are you playing in a market that if it isn't already really, really large and it hasn't been proven out that there is enough money or enough of a business to be built there, or not a massive incumbent that is just going to route you, like that market has to be able to have the capacity of a company that could be very large if you are the team. Which brings me to the second point, which is, are you the team to build it? These are the only two things that you have on hand, especially in a pre-product seed stage idea. How we decided to fill what actually qualifies as a great team, etc. Yes, VCs are pattern matchers and they've done a pretty terrible job, very honestly speaking, picking males out of IITs and IIMs, and I have all of the labels as well. Like very honestly speaking, that makes you attractive because, to your point, right? Like a proof or a track record in this allows you to manage your risk, because anyway, the idea itself and the product itself, it's a massive risk at a pre-product seed stage. So you're like, okay, is the market great? And if it's great, is this the team to sort of back? And what are the markers that make this team great, right? So what entrepreneurs need to realize is if you don't have a track record and if you don't have this, just show them what hustle looks like. So your burden of proof of like why you need a product, etc., is honestly they're trying to see if you have the capability to build the solution for this problem, which maybe you've convinced the VC about, or if someone else is going to come by with far more heft in building products for years out of say a capillary or a Freshworks and decide to go after the same problem, and then are you able to sort of able to compete head to head? Very honestly, like think about it that way. So that's what it is. Like it is about balancing and how you evaluate risk around these spaces. And if founders actually flip the equation and is like, how risky do I see as a bet, and are there small things, like I don't have to hit every single checkbox, but is there one maybe that I can overperform on, which is like just pull out your, like I've seen founders do everything from like sending in their Git profiles and all of the stuff that they've built on, or like say if Vamsi, like I met him like 5-6 years ago, like the fact that he has been an entrepreneur in all these different ways before, that itself gives me like great sort of comfort. So it's those kinds of markers that you need to leverage from your personal and more authentic sort of stories from your own backgrounds to like to position that, hey, while I don't have these things, it really doesn't matter because you're using that as a marker for my capability as a founder. I've proven that out in these ways. So that's the way, like, to flip this question. And yes, like, have VCs like long fallen prey to looking at patterns. The other reason people get investing from these backgrounds is also like they look and sound exactly like the VCs on the other side. So we need diversity on that front as well. It's like how I know how many folks from these institutions are within these organizations that are cutting the checks. And sometimes, to your point, if you have very little time and track record for the founder, but that founder is someone you studied with or is someone who's vetted by someone within your own network, that's a risk you're willing to take, right? So it's a lot of different factors that are playing into reinforcing our biases in what we sort of invest in. But there are unbelievable, incredible VCs within the seed stages that are very actively taking this on head on, right? So even within our portfolio, I know we can do a lot more. We'll continue to do even deeper, but like really looking for targets from the cities that they're best. Like we have a company called Unbox, which is based out of Pune, building some of the most brilliant things in robotics for warehouses, but they will very firmly stay in Pune because that's where the best talent for them comes from. That's where they're going to build this out of, right? So Indore, from Mangalore, from all of these different cities, we see innovation engines coming, but it requires you to also source very differently. Really make sure you're in front of these founders who are not at some Bangalore Web3 mixer, right? Like it's all of these things where you're looking, who's looking, and what they're looking for really matters. And especially when it's a pre-product seed bet that you need to take, it's a matter of, okay, how am I helping this person make a decision about risk management on me as an asset, right? So really like very, very horrible clinical way to put it. But if you start thinking about it that way, you realize founders are also able to game. And that's a lot of the work that we do with our company is hey, you have to just convince the person that you and your idea and your market is the one to bet on. So that's about communication and communicating it right. So I feel a lot of fundraising conversations break less because there's not something special there, but it's also because you've just not been able to communicate all the special things about your team and the product and the idea that you're doing. So there's a lot to unwrap there, but I'll stop here.
No, but I think I have personally picked up a lot of interesting notes, which I'll summarize towards the end of the session. But Vamsi, do you want to add on to any of these aspects?
Yeah, I think since being from IIT, and there's a stamp sometimes that IITians are unfairly judged, or like they have some odds that are in favor sort of thing. But still, I still want to comment on that part specifically as well. So I think when we unfold this entire funding thing overall, I think there's this simple thing saying that are we going to fund or not? It's a yes or no sort of decision overall, right? So at the same time, there are like different types. When we really again slightly unwrap it a bit more, we see like companies that are, like markets that are already there and markets that are yet to unfold overall, that will be created maybe in a couple of years or so, 24 months or so. So that point of time, we don't have too much of real evidences to look at. There are only limited things to really that we can really look at and take a decision of that yes or no sort of thing. So when it is a market that is yet to be unfold, like for example, a BCI, brain computer interface sort of market, for example, no one really knows how is it going to be positioned. We only know that it is a better convenience, or it is a better, deeper technology that can help our life easy or make our life easier sort of thing in multiple ways. Maybe, and the founders, do they have the track record to really do that? Do they have the ability to do that? There are only few reference checks that we can do, etc. There are some questions that we can ask that are much deeper than the usual surface questions, and we can understand if they can do it or not. And post that, it is more of that bet that we can take based on the prototypes that they have done, or they have any their past projects, etc. And they can come from any background, right? When they come from the tags of IIT, BITS, or any other bigger institute, it's an add-on evidence saying that it gives them uh, that heavy confidence, saying that this person might be able to do it. So I think that acts as a bonus points, or the tax as a brownie point, saying that this person can be bet on overall. And on the other hand, you have markets that are already existing. For example, Uber for anything, Uber for laundry, or Uber for studying, or whatever you call it in general right now, right? So these are business models that are already there, and people are trying to do their own tweaking of business models at this moment on the existing things where the needs are already there. They are just trying to fulfill their needs in a more convenient manner, maybe, for example. So coming to these models, I think the only way we can judge is because we are trying to fund them for their scaling up at the end of the day. We are not, because we know that the markets are already there. We are not giving them money for creating the market, but maybe for building up their market and trying to occupy that market overall. So in a similar pattern where we try to see if they are capable enough to grow the project or the company that they are building, have they got some basic evidence. It might not be crores of rupees, but at least some basic evidence that they have the ability to build their own teams. They have the ability to structure their teams in a way, because I think teams and all, I think, is not usually spoken out much of. I think it is slightly undervalued or undermined in terms of the value of team and how they structure it is something I personally feel or felt overall, because I think founder are important, but their ability to build teams becomes even more important, because that's what plays a critical role while scaling up overall. So I think those are those things I think I kept on identifying over the time, or I felt I could uncover over the time. Obviously, there are own exceptions here and there, but still I think those are the overall summary or the frameworks I could really think through over the time right now.
Right. And interesting you mentioned about scaling up. So I also now want to move on to the second stage of the life cycle, which is once the startup begins to scale up, how do you then begin to view it from sort of investor lens, right? Do you start to look at whether do they have the right processes in place? I know governance has been a very hot topic recently in a lot of startups, right? The whole broad concept of ESG, if I may say. I know Pranav mentioned that you have like a ESG. Siddharth is now the ESG officer at 314 and so on and so forth. Do you see a lot of these things also coming in now when you begin to look at a startup in Series B, Series C stage in a mature format? Do you start to look at these metrics, Vamsi?
Yeah, because I think, I mean, the moment there is more and more people, there is more people on board, etc. I think there's a chaos that is already there, because everyone feels it, because everyone might be focusing on markets that are still emerging, and someone wants to focus on the low-hanging fruits. So it becomes like a short-term versus long-term war or battle in between the founders. Sometimes I was the other day, I was just meeting a founder who just took an exit because of several reasons between the conflict between the founders or the investors, etc. But obviously everyone had their own reasons. But he was sharing, saying that he had a different vision compared to the people that were inside, that are still running the company overall. So I think it becomes a massive difference between how each one wants to run the organization overall. So I think that plays a really critical role, and that really sometimes changes the way people want to run the organization. And obviously, the moment that thing sets in, someone wants to say that we want to make sure that the company survives, or the funds are basically lasting for so and so duration. So we need to make sure that the revenue model is being built in this shorter duration that is available to us. And at the same time, someone wants to say that, but we have tried building the company, or our purpose of trying to start this company was so and so thing. So sometimes that really acts as a friction. And we obviously, being an investor, I think sometimes investors also want to make sure that they are putting in so much of hard-earned money of some limited partners overall. They also want to make sure that the startup might they can slightly postpone their goal or something on those lines. They want to reach their vision, but at the same time in a sustainable manner. So there are a lot of clash of visions that keep coming in, that makes it a chaos overall. And that's where I think the ability of the founders and the onboard investors comes into picture, where they manage the chaos. it become where the managed chaos can basically maybe help the entire thing to really make it sustainable overall. I think that's what is a very good parallel with Google. Google is a very well known, I mean, organizational structure where they are known for having their free mind to, or have their free, there's a more open minded sort of thing, right, to work, etc. So but they have some way were able to do manage that entire chaos into a way where it has been sustainable and well structured, like a well-oiled machine to run. I think that is a good parallel I can draw, where with many startups, if they are able to do something similar, it becomes a more sustainable. At the end of the day, they are expected to become a very sustainable business in the long run, which is expected to break the boundaries that they are just set overall in the conventional manner, right? So that's where I think I hope I answered your question. Yeah.
Right. Nruthya, what do you feel about? I know Vamsi talked about it from inside out perspective, but as an investor, how do you sort of read into these things when such disputes happen, or how much, or sometimes you only get to know about it when everybody else knows, right? Because you also have a portfolio of companies to manage. You may not be literally spying on each founder and what they are doing in their meetings and internal governance, right? So as an outsider, you have massive responsibility and obligations to your LPs, and you have the best intent, but sometimes there is also a lack of information on what's really happening on the ground. How do you mitigate those risks, and what kind of fail-safe mechanisms which you guys look for in sustainable businesses? Or as I use your phrase, that if one was to put or take on an investor's hat and look at how risky am I as a startup, what kind of mitigation procedures can startups undertake to give investors like you confidence around governance, making sure that the founders are aligned, the team is stable, they are pursuing a common vision, and there's a convergence of interest rather than conflict?
Yeah, these are all difficult things. See, let's go down to the point that he mentioned, right? And I've been an operator on the other side as well. It's very much managed chaos, and to what extent you're managing it is what defines how fast you can grow, etc. But what's very interesting and important once you move from early to growth stages is another point that Vamshi brought up, which is your entire leadership and how you democratize decision making across your organization. Because once you start scaling up, you've got 50 people, you've got 100 people within the org, the founder has no way to be able to control, and startups move so much faster than even processes being put in place to manage or scale them in the right way, sustainably, with the right kinds of burns, etc. So the biggest onus is honestly like, how do you hire the very best people, how do you trust them, how do you enable them to be able to drive organizations that replicate the same level and intent of decision making and product sort of nuance all the way to the end. And that's where we have this like amorphous thing called culture thrown at us. And its culture is not like, it really is not the perks that you get. It's not whether you do offsites in like some other country. It's not whether you drink in the office or not. It's very much like, how do you democratize the decision making to a point where at the founder level, all the way to the newest developer onboarded onto your team, you're making decisions for your customers, for the business in the same way, right? Like, can you really like imbue them with that, not just autonomy at some level, and it's not this monolithic decision making that's driving it, because that's the thing that will start slowing the scale up of a company down. To your point about risk and governance, etc., the way we worked early on, of course, we do diligence, everyone does, but it really does come down to the relationship you build with the founders. And it is an onus on both ends as well, right? Like both as an investor and as a founder, on how you build a really transparent sort of working relationship with each other, where it's less about if you're in trouble. And let me be honest, right? Like with most founders, in fact, almost all of them, there is no intent to like they're very much wrapped up with the success of the company. This is their baby in a way. It never will be for an investor, where it's a bet that you've made. Now how you work hand in hand together, and it is less about always projecting this incredibly positive, constantly growing and up and to the right view of the company. And I think investors and boards are also partly to blame to put the pressure on founders to only give that view, as opposed to being what we are supposed to be, which is, hey, we're in trouble because of these things. We may need people, we may need resources, we may need new structures of how we're making our decisions around this thing. Can you help? Right? It's not a governing body to say yes or no, you're doing right, wrong. It's not, you're not reporting it, your board needs to work for you. So really, like, building that relationship early on is something that founders, again, this is like the evolution of the ecosystem, right? Like, we didn't have enough money flowing in, now we have strong founders, we have strong boards, but we need to get them to work really well together, where the relationship is a lot more simpatico than a one-way representation of everything being hunky-dory, when honestly, to what Vamsi said, there is clear understanding on both sides that it is true and total managed chaos. And your investors can come in with that support, and we do that very, very, like, regularly at 314, whether it's on the policy front, whether it's regulatory, when you're thinking about flipping the company here, there, how you're putting up systems to make sure there isn't, if you're a cash heavy business and cash collections business, there isn't revenue leakage at the end of the day, in all these points. These are things that we've not just seen before, but honestly, a lot of VCs are making a lot of effort into building systems that actually give you this ability, structures in a structural way. You get this help not just from us, but by the army of experts and the network of operators globally we've marshaled to be able to give you this advice because they've done this before. So I think it's a mix of it. It's honestly, it is an evolution, but it's the time where the relationship between founder and investors really needs to evolve from one of like a reporting relationship or a one which is less transparent to one that really becomes, okay, we're invested in this with you, right? Like, truly we own equity in the company and we're trying to do everything that's best. How do we align that we're thinking about the same things and we have the same definition of what best looks like for the company? So I'm sorry, that's a bit of a long-winded and more philosophical answer, but we'd be happy to go deeper into specific things.
Right. So, in the interest of time, we've got 6 minutes remaining. I'm going to ask a couple of sort of rapid fire questions. One, what are the innovative? I know there are a lot of financing models which are also up there. Can you help our audience members understand them? I mean, we have seen companies like Club coming in who do revenue-based financing. We've got a mix of debt and equity. We've got grant-based funding. We've got revenue share arrangements and whatnot. So help us understand what are the 4-5 new financing models which are evolving, which entrepreneurs can look at, especially early stage, and also help us understand from your experience which are the sectors and opportunities which you guys actively look at, and you believe from an investor point of view, if somebody, I'm not provoking anybody here to start a business in whatever they say is hot, but which are the plays you see exciting at this stage, which can give some inputs to our audience members? So, Vamsi, do you want to go first?
Yeah, with regards to the sectors, I think I would be able to better comment. And with regards to fintech, I think right now there's a lot of new type of models that are coming out. Someone is starting on pension, someone is starting on buy now pay later, which are multiple that are there. Someone wants to do like a goal based on those lines, etc. So there are multiple models that are coming out, and I think the combination of the existing banking system in combination with the neobank type of structures that are evolving at the same time, I think there needs to be a sustainable balance that will be like that might come over the time. I think right now it is a bit too early to judge because everyone is trying to figure out. To be honest, that's what I personally I feel. I might be wrong, etc. But I think that's what I feel because I have been talking to many fintech people. Everyone was like, we don't know. I mean, that's what they say. They're like, we wanted a fintech company in our portfolio, so we funded it. So similarly with Web3, a lot of people are coming up and a lot of things are happening. Half of the people don't understand it. Half of the people who understand it, half like don't know whether they have understood it or not. So it's a very funny thing that's happening right now. And I could only feel like the one thing that is there and that the one thing that's evolving right now is hardware in combination with intelligent software or analytics part. I mean, just to draw examples, as I was mentioning, BCI is one thing. Or else there are like bots that are going into pipelines and analyzing whether there are cracks in the pipeline. where it is a combination of analytics and like intelligent software, etc., plus hardware. There are people who are launching satellites, are trying to make new types of satellites, like mini satellites that can just go around, and that can, the launching of satellites is very low in the space tech. So I think these are quite few segments I feel which also have got their own mode. They're not easy to like replicate at the end of the day. It is not like I saw like Binopulator working well, and I just tomorrow can start off, ask Nruthya some money, ask you some money, saying that it is working well. I have some good track record. But obviously, you know that there are several of them, and there are someone else can also start off similar thing at the end of the day. But I think these have got some real modes which are not easy to replicate. I'm not saying that they don't have competition, but it is not very easy to replicate because they take couple of years or like 1 2 years of time to really get into that momentum overall. So I think that's what I would summarize from my end.
Right. Um, any thoughts from you, Nruthya? We just 2 minutes into closing the session. Top sectors, top picks, and any innovative financing models for entrepreneurs to consider.
Yeah, I mean, there's a ton. I think one top sector for me has to be this new consumption story in India. What the new Indian consumers, we've typically for the last decade built products for the top urban elite, like we call them, the 10 million consumers here, and the democratization not just of access, but I think within our portfolio itself, we've been proven that beyond, above and beyond tier 2, tier 3, tier 4, even in rural markets, there are businesses to be made. There are evolving, sophisticated consumers coming out of it, and they will put their money, however small, behind value wherever they see value. So whether it is in brands, in content consumption, how gaming is changing, what that Indian consumer will be, that's a very, very exciting place to keep an eye on and watch and bet on models in that. Again, our job is to look a little further into the future, so it's not very growth right now bets, but there's a lot again within Indian enterprise software being built out of India. Very, very unique perspectives, a ton of phenomenal operators from this business stepping away to build all the building blocks of a business. So that's another space that we're very bullish on, and we're looking very closely at. But yes, to Vamsi's point though, Web3 is a very huge focus for the fund. We are looking very closely. We've already backed several different types of models. We are eagerly awaiting clarity on regulation within India, and hoping that a lot more of those companies remain here instead of fleeing to markets and countries that are able to sort of build this sort of regulatory frameworks much faster than us. But in terms of alternative financing options, there's a plethora of them. Venture debt's evolved and reached an incredible peak over the last year as well. We've seen revenue-based financing. We've seen multiple different companies get into this and build very alternative assets. There are alternative assets that are made available to you that allow you to directly invest into a bond against a company's sort of financing, with companies like Wind Wealth and others. So there's a lot of very interesting evolution there. However, I would urge to keep your eye on very closely is this evolution, and this market has not gone without notice from the banks. The big banks, they are evolving. We work very, very closely with them, and they're far, far further along in thinking through their entire tech stack and how they're going to leverage this growth in a big way to be able to lend to early stage startups, which typically was never a game that they were able to play, sometimes even regulatorily before. So it should be a very exciting decade of the kinds of players, probably even the 5 biggest banks in the country actually honestly giving us a true run for our money into the coming years, because we really can't match the cost of capital from them. So it is a good time. It's a great time to be building. There is capital still, even with the market slowdown or whatever else. Those are all smaller blips. They will keep happening, but for good businesses, great founders, etc., there is always a plethora of capital waiting to fund. So I'll end with that.
Right. That's a very happy note to end on. And we're almost out of time. Thank you so much, Vamsi and Nruthya, for sharing your inputs with us. And I believe if I can pick up the last couple of points from both of you, that the community is there, the ecosystem is developed. But just think, I really like that line which you said, Nruthya, that just imagine from an investor perspective that they're just allocating capital on behalf of somebody, and they just want to evaluate you clinically, that how risky you are, like you would do with any other investment. So I think that's a very clinical approach which all of us as entrepreneurs can take up. And thanks, Vamsi, for giving us insights around which are the top areas, which sectors to look at, and how to build a strong culture and foundation in the team. With this, I hand it back. Good to see you, Rakhi. I just ended up. I'm going to hand it back to the moderator for the next session. Thanks again, Vamsi and Nruthya, for joining in.
Thank you,
Really,
everyone.
thanks.